We have David Blanchflower, professor at Dartmouth College of Economics from New Hampshire, and he's also, of course, a former member of the Bank of England's Monetary Policy Committee. David, good to have you back. Reminiscent of the 1930s depression. What do you think?
Nice to speak to you again. Well, obviously it's a considerable worry. I mean, we've had this great scholar of the Great Depression, Ben Bernanke, saying in 2007 and 8, we have to act, we have to put in stimulus, we have to prevent this happening. And it seemed to have worked, and then everybody backed off. And the worry was that that's what happened in the 30s, and the danger is we're going to repeat those mistakes. I think it has a feel of the 30s about it. It probably right now has a feel to me rather more about the spring of 2008, where the ECB raised rates and nobody seemed to notice a spreading banking crisis. But this is really, it's either bad or worse. So I think what we're seeing is people running to safety, they're running scared. And many people had warned of this, and I think we're in a little trouble now.
Okay, reminiscent of 2008, so deja vu that we heard from Josef Ackerman of Deutsche Bank over the last days as well, David. We've got lots to talk about, don't we? I mean, you can't blame, I was going to say, investors for running into safety and running scared. I mean, look at this move from the Swiss central bank. They seem to be firing shots at the market as well.
Well, what we're seeing are people are running scared. They're running to gold. They're running to strong currencies. They're running to treasuries. And that has effects on countries. So think about Norway, Japan, Switzerland. These countries depend upon being able to sell their products abroad. If the exchange rate appreciates, that amounts to, if you like, pulling out stimulus to the country. So they can't be faced with that. They need to be able to respond, and so countries will respond. One of the things that I did on the MPC and the Fed's done is have an effect on the exchange rate. When I was on the MPC, we tried very hard to talk the exchange rate down. The pound fell against other currencies by about 25%. That gives you a stimulus. So countries seeing their exchange rates appreciate, going to have to do something about it. But this is really just one indicator, as you rightly say. Investors running scared and should be in places of safety. That's the worry. Austerity isn't working around the world. The policymakers are losing the confidence of the markets.
And they may be losing the game and also the support of their people. Take a look at the protests that we're seeing in Spain and Italy. What's going to happen in Europe? We heard from PIMCO, El Arian saying a 50-50 chance of maybe another recession, maybe depression, some are predicting. What do you think, David?
Well, I tend to agree with that. I mean, we've seen slowing growth in Europe, slowing growth in the US, and the powerhouse of Europe, Germany, we've seen bad consumer confidence numbers, bad IFO index business confidence, growth slowing, and austerity coming in everywhere. And in some sense, the people are eventually going to respond. And it doesn't look that austerity is going to work in Greece or in Italy or in Spain. In the UK, they had riots. Eventually just saying austerity, 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 this is really hurting people, and I think we have a really big problem. A meeting of the G7 on Friday is going to talk about trying to slow the process of austerity right now, trying to generate some growth, but German government, the UK Chancellor today say, we're not going to do that. What they're saying is, let unemployment rise, we don't care, and that's a big problem.
You know, you seem to be harping against austerity measures, but isn't that what Finland and other members want to see from Greece before they get their next payout? And why shouldn't they? I mean, how much more can other nations prop up the Greece economy?
Well, these are not really addressing the fundamental problems in the Greek economy. I mean, in Greece and other places. The problem there is that essentially you can't give more expensive debt to an over-indebted country that doesn't have a tax system, doesn't have a competitive product or labour market, and expect them to pay up. So the problem is that you impose austerity and you want to make sure that growth comes, but by imposing too much austerity, growth doesn't come and you're in a vicious circle, which is where we are. The UK is the classic example. Growth had come, the new government came into power, talked down the economy, went into austerity, and it's seen no growth over the last 9 months or so. Today's data for Europe came out and showed that of the 27 countries, the UK only beat Romania and Portugal. So the country that chose to do austerity, we've seen growth collapsing, and it looks like Q3 and Q4 are going to be worse. But the German economy, that powerhouse German economy, What everyone's realised is everybody's in it together. Germany has to be able to sell its goods to all these other countries.
But you
and what we've seen is
keep
global
spending
removal
beyond
of
your
the
means,
stimulus.
David. For instance, isn't that what's happening in Italy, Spain, and some are saying France might be the next nation as well? How scary is that?
Well, I agree with that. I agree with that. But you need to have two things. You need to have a plan for growth, and you need to cut back spending, but a plan to deal with it. So in terms of Greece, they need to get themselves a proper tax structure. They need to get competitive product markets, competitive labour markets, reforms on that basis. But you can't just cut right now because it's destroying growth. I mean, that's the problem.
Okay.
And the markets are worried about what's going to come tomorrow. Is the German court going to rule in favour of bailout? If not, does Greece leave?
Okay, well, maybe that's what some want to see. But forget about talking about taxes. Let's talk about also stimulus. We have Obama speaking this week. We have Ben Bernanke and the boys meeting for 2 days instead for this month. What does the global economy need in terms of help right now from the central banks around the world?
Well, I think obviously we're going to hear discussion from Obama talking about stimulus, but that's probably a way off. He's talking about it. It'll take a long time to get implemented, probably. What we're going to see, I think, is pullbacks from the European Central Bank. I mean, they raised rates foolishly twice this year. There's calls, and rightly, I think, to see them pull back on that, cut those, remove those increases. And I think what you're going to see over the next 2 months is the Fed and the Bank of England go into QE. They're going to do more QE. They're going to have to do that. And it's possible the MPC might act on Thursday.
David, we're out of time, but thank you so much, as always. It's great to hear your insights, David Blanchflower. Fantastic. It's mutual. David Blanchflower of Dartmouth College.